So welcome back. Now in today's episode, we have a discussion on tax lien properties for sale. Now I think most of you are going to be pretty amazed to be exposed to the millions of tax lien and tax deed properties that are available nationwide. In this episode, I'm going to reveal how properties become tax liens and tax deeds and how they get sold, not just at regular sales, but at auctions. So we're going to talk about that. For example, in Florida, which is absolutely exploding in growth right now, and that's probably because they have no state income tax and they got lots of beaches and sunshine. Well, Florida is a pro-growth state, so I'll stop talking about Chamber of Commerce stuff, but Florida has a lot of tax lien certificates. I would expect this year, like the past few years, that in the 67 counties of Florida, they'll have at least 1 million tax lien certificates available. Now, normally they sell those in May and June, although when they finish the auction part of it, whatever are left over, they will sell over the counter at the local county records. So keep that in the back of your mind. So there's plenty of tax lien certificates for everyone. Now, my name is Ted Thomas. I've been involved in tax lien certificates and tax deeds, which is a subset of the regular real estate business, for over 30 years. So in the next few minutes, I'm going to reveal some pretty amazing information about tax lien information, and I'll be right back. Okay, so let's start, first of all, talk about what we're going to talk about. Tax lien properties for sale. That's the title of our episode today. So entrepreneurs, one of the biggest reasons people get involved is they want to be self-employed. Maybe they don't fit into the corporate mold. Maybe they're not templated people. They want to work for themselves, and they want to work when they want to work, and they have a lot of reasons for being entrepreneurs, okay? So if they don't want to work on someone else's timetable, they want to work in the middle of the night, that's entrepreneurs. But that's a hard way to go. I'm not suggesting you don't do it, but don't be in a dream world and think you're going to have a 40-hour job working at home. I know a lot of people that quit a 40-hour job and they have to go home and work 60 hours to get the same, anywhere near the same pay. So you're getting the idea. But if you're working when you want to work, well, I certainly go along. All right, now, Florida is a state that's going to auction these tax lien certificates. They do the majority of it in May and June, but you can buy them at any time throughout the year. So the information I'm giving you now will just give you a little bit of understanding of the process. Anybody can do this that learns a little bit about it. Now, I don't want you to think that you're just going to walk down there and start doing it. You should learn what the tax lien certificate, your involvement is when you buy one of these certificates. So this is an episode that we're going to talk about exactly what's going to happen. So I'm going to kind of give you the who, what, where, when, and why of tax lien certificates. But first of all, it's a passive investment. You raise your hand, you're going to give your money to the government, you're going to get checks back from the government. But this is perfect for a portfolio where you have an IRA or a pension plan or something like that with fixed investment. But it's a passive investment. You're not active at all because you're going to invest with the government. When the people come in and pay their taxes, then you're going to get paid. And that's how it works. So across the United States, there's over 3,000 counties. About half of those counties will sell tax lien certificates. Now, unfortunately, a lot of people don't pay their property tax on time. So that causes the local government a lot of problems because the local government uses the revenue from tax lien certificates to pay their bills. All right, so what's the solution? Well, they can try to force people to pay tax, but they just passed laws. So the legislature in all 50 states has said all property owners must pay taxes. So you're required to pay taxes if you own residential real estate. Now, if the property owner fails to pay, the legislature has already authorized the Board of Supervisors and the county commissioners or the county commissioners to go ahead and tell the treasurer to levy the tax, try to collect the tax. If they can't collect the tax, what they're going to do, in half of the states, they'll issue a tax lien certificate. Now, when they issue that certificate, they're going to do that and let people know on the county records and in the newspaper. All right, so if they haven't been able to collect taxes, they issue a tax lien certificate. The other half of the states are going to confiscate the property. They're going to take it right away. All right, so the states that sell tax lien certificates are basically benevolent states. All right, but if they can't collect those taxes after they've tried to give people a second chance, they are going to take that property and confiscate it. So I say the tax lien states are benevolent. They give the people 1, 2, sometimes 3 years, depending upon the state, for the people going to pay the tax. So in a tax lien certificate state, they don't push the people off the property. They leave them in the property. They're very benevolent. They leave them there. They give them plenty of time to catch up and pay the bill. If they don't pay the tax bill, they will ultimately confiscate the property. All right, so the delinquent owner must pay the taxes. If they don't pay the tax lien certificate, they will lose the property. Now, why would people even want to be involved in this business? Because when they issue a tax lien certificate, depending upon the state, they could give you a generous rate of interest. If you buy a tax lien certificate, you're paying someone else's tax. Yes, you're paying someone else's tax. Now, because you'll do that, that local county will pay you 60%, 18, 24, all the way up to 36% interest, depending upon where you're doing that. So lots of investors want to pay someone else's tax because they know that that's a generous rate of return when the banks are paying 1% or 2% or whatever the low rates that the banks are paying. All right, so now, what about getting paid? So you're concerned about getting paid, and you're saying to yourself, well, Ted, if I buy one of these certificates, if they won't pay the county, why would they pay me? Here's why they'll pay you. When you buy a tax lien certificate, the local government gives you a covenant. A covenant is a promise. And the promise is, number one, that you'll get paid. And it could be 16, 18, 24, whatever you pay that certificate and agree on the rate on that certificate, that's what you'll get paid. But if the people don't pay you, the government is already covenant in the tax certificate that you will have a promise that you can take over the property. Now, will you have to do a foreclosure? Yes, you have to hire an attorney and do that. But you're going to own the property without a mortgage or a deed of trust loan. In other words, the treasurer will take the deed of trust loan or the mortgage loan off the property, and you'll now own the property for what you paid for a tax certificate. Now, generally, tax certificates are going to sell for pennies on the dollar, 1, 2, 3% of the value. So now you're going to have bought a property for just paying the back taxes. Folks, it doesn't get any better than that. All right, so what's common? Well, what's common is 95, 98% of the people will come in and pay. So people want to buy the certificate knowing that 95 or 98% are going to come in and pay them. So you're going to get your money back plus 18%. So what's the point? What's the point I'm making here? The county needs money. The county wants the money, so what they do is they sell a tax lien on a delinquent property. You can buy the tax lien certificate, earn the high rate of return. If you don't get the rate of return and the people don't pay, you're going to get the property. Simple investment. Only two things can happen. You're going to get paid or you're going to get the property. In either case, that's a pretty darn generous way to make your money. All right, these high interest rates are fixed by law. They can't be changed. Once you own a certificate, it's written right on the certificate how much money you're going to make. So there's two winners here. There's actually three winners. The county gets paid because they need that. The homeowner doesn't get thrown out of the property. They give them a period of time. And finally, you make money on the deal. It just isn't going to get better than that. All right, so if it sounds risky, I don't believe it's very risky because you invest with the government, you're going to get a check back from the government. I think that's the safest investment in America today. All right, now you don't get possession of the property because the property owner is going to stay in that property. Property is not leaving that property. Now you can buy these things, you're buying properties basically for less than 10 cents on the dollar, and if you do get the property and it doesn't have a mortgage or a deed of trust loan, well, how good is that? All right, what would you do with it? Well, you could sell it any way you want. You could sell it in the MLS system. You could sell it on Zillow. You could sell it on Craigslist. You could use eBay. You're kind of getting the idea. So let me quickly go through a quick example. Okay, so ultimately an investor either gets paid or gets the property. So let's say we have a $200,000 property and the property owner doesn't pay. So the auctioneer will put it, on behalf of the county, will put it up at auction, okay? They'll let you know that you can go to that auction. You can learn that in the newspaper, or you can look at the county website. All right, so let's say there's $6,000 in taxes due. So if you buy the certificate, you pay $6,000. Let's say you get 18% certificate. All right, it might be 1 year before they pay, might be 2 years, might be 3, depending upon the state. All right, but when they come in to pay, you're going to get all your money back, the $6,000 plus 18%. For each year that certificate was outstanding. So anybody can attend the auction. You just have to have money. So let's assume you attended that auction. You could go there and you could buy any number of certificate. Not unusual to see 10,000, 20,000, I've seen 60,000 certificates in Miami available. Takes them a number of days to sign that in the old day, but it doesn't take too long now because you can do the whole thing online. So you can buy online and offline. Now I'm running out of time, so here's what I need to tell you. If you're going to buy tax liens, it's just like buying tax deeds. I'm going to suggest that you check out that property and make sure it didn't burn down, make sure they didn't have a hurricane, make sure there's no flooding, make sure it's not next to a chicken farm. Now, my name is Ted Thomas, and I can tell you I'm going to finish up now, but right below me, if you're interested in these auctions, we'll give you a sample auction list, and you just go below me and register for that. I'm Ted Thomas. I'll see you next time around.